Welcome to the Money to the Masses podcast, putting you in control of your finances. It's a good thing podcasts are free, as this one isn't worth a penny. Here are your hosts, Damien Fahy and Andy Leeks.
Now, Damien, before we get on with this week's podcast, you had something quickly to say about our sponsors.
Yeah, we've got a new sponsor, Money Farm, and Money Farm are an online investment advisor and one of the biggest digital wealth management companies in Europe. So a big thank you to them for sponsoring the podcast. Now, Money Farm create portfolios to maximise long-term returns using ETFs to make incredibly cheap portfolios. And you even get the first £10,000 of your portfolio invested without any charge from Money Farm. And if you enter the code MTTM20K into the box when you sign up, you get the first £20,000 of your portfolio invested and run by moneyfarm.com without any charge.
Great stuff. On with this week's show.
Hello and welcome to episode 108 of the Money to the Masses podcast with your resident expert, me, Damien Fahy, and alas, no Andy Leeks. Now, Andy is not going to be on the podcast this week, and this has only ever happened once before. Loyal listeners will remember Andy once got himself locked in a airtight chamber in the middle of the UK for the in the name of science previously. Unfortunately, it's not that interesting this time. Poor old Andy has got man flu, and he wanted to do the podcast, and I told him, no, Andy, you need to have a rest. So Andy will be back next week, as happy as ever, and hopefully feeling a lot better. But we need to keep the show on the road, as Andy knows, so I'm doing it alone this week. That doesn't mean it's going to be any worse. Hopefully the content is going to be just as good, and in fact, there's some really exciting stuff I'm going to talk about this week. Of course, there is the election, the US election. I couldn't do a podcast without talking about it. I don't try and date stamp these podcasts. I like to make them evergreen, but there will be something that is incredibly evergreen that comes from that. In fact, it's going to be the best or possibly the most important DIY investing tip you will ever learn. And that is courtesy of Donald Trump this week. So you can thank him, even if we all despise and loathe the man. And the other thing I'm going to do, I'm going to start with this topic. And this week I've been if you've been following me on social media, looking on Twitter or Instagram, you will have seen that I have been in Lisbon. Now, this wasn't a holiday or any kind of jolly. This was work. And as you know, Money to the Masses, we like to push boundaries. We are out there with this podcast. We're doing things that financial firms can only dream of, with compliance departments holding them back. And actually, they're just genuine lack of creativity or caring what you guys think or what the consumers out there really want. So we have the website, we do have social media, we talk to you, and of course the podcast, and we have 80/20 Investor, our DIY investment service. Now, the trip to Lisbon is where I'm going to focus first of all, and this was in aid of something called Web Summit. Now, Web Summit, it's an incredible exhibition of technology. It's if you imagine 55,000 people, 55,000 entrepreneurs, tech geeks, geniuses, whatever you want to call them, converging on one place, and an exhibition centre that, if you imagine something like, if it's the NEC, if you're from the Midlands, or if you're down in Earls Court or whatever it is in London, if you imagine something that is even bigger than those, and it's got 55,000 attendees, thousands of companies, including some of the biggest, Facebook, Amazon, all going there and doing talks showing the latest technology. There were virtual reality was there was artificial intelligence being displayed and showcased. There was drones, it was the next technology. There were driverless cars. There was all these technologies, and also the innovations, the disruptors that are on the financial side, which comes under the rather boring name of fintech, which is a bit of a cover-all term. But it was an incredible experience, because we went to see some of the stuff that's inspiring. There were some really brilliant marketeers out there. If you are into marketing at all, especially not in the traditional sense, but on online, if I say the words Gary Vaynerchuk, then you will know who I mean. He was there, did a brilliant talk. the point of it is, I want to bring you, distill down all these different sectors and areas of expertise, whether it's from cars, whether it's from retail, whether it's from space and people trying to put, incredibly, there is a company that's going to put a robot on the moon in 2017, so that's next year, for less than $7 million. Now, they were there, and there was it's these incredible people and entrepreneurs and tech people are going to pull together a lot of the stuff I saw, the talks, the people I spoke to look at what it means for the world of investing and financial advice going forward. Now, the idea of technology disrupting finance isn't new. We've been talking about it before on the podcast with things like robo-advice and, of course, the very well-known one of passive investing. Now, passive investing, as you know, is effectively a computer tracking an index, and there is no real human intervention. Now, as you probably heard, is that we have a sponsor on the podcast at the moment, Money Farm. They take that kind of idea and overlay a human element to it. So there is different ways of doing this, and computers are going to be having a greater influence in the world of investing. And where is this going to end up is the interesting question, because if we have active managers, are they going to disappear? Are we going to just all be passive investing? Or what are the latest things that are coming out? Because there are some quite interesting social elements to investing that have just been pushed out by some of the names out there that you won't have heard about. Now, I'll come on to those. The idea of computers running all our money is not new. Vanguard have been doing it for probably 50 years, not obviously initially with computers, but they've been doing where they just track indices, and it's very simplistic way of investing, but it does tend to outperform most fund managers. Now, there's a reason why they do, and we talk about it. It's a key part of my DIY investment service at 80/20, where we get rid of the human element, the human flaws that make us bad at investing. Fund managers tend to underperform because they're human, and they've got the various different fears. They have the human traits where they will be greedy, or when they're winning, they will sell their winners either too late, or they will actually they will end up compounding losses by trying to chase winners that aren't even there. So we screen that out. We actually, with 80/20 Investor, it becomes much more. There's an algorithm that's built in. So we are tech disruptors with what we do. And of course, there is a human overlay to what we do on 80/20 Investor, because I provide research and insights that help people make the most of their money. And we're getting some fantastic reviews for the content that I write as well, which is thank you to Mark, who was one of many who wrote in this week following my review of what's going to happen in the election. Some of you pointed out that I called it that Trump would win. I just highlighted it as a very distinct possibility, shall we say. Right. The point I wanted to make about investing, the computers are very much involved at the moment with what we do, but they are inherently a problem in themselves, because as more money goes over to tracking the market, they actually start tracking themselves. And as we see with these flash crashes that occur, computers are incredibly fallible, because what they will do, there will be a very simple formula that will say if the market does X, then they will do Y. And they can become much more intelligent as we go forward with artificial intelligence that's evolving. That if we're going to have driverless cars, you think, well, if cars can drive and avoid risks, surely they can do it within investment markets and to make them even better than what they are now. Not just sort of track the market, but even beat the very few and the very best investment managers out there consistently. Now, the point is that computers are fallible, and artificial intelligence has not grown at the rate that people would expect it to, or what you think it is growing at. Now, I want to give you a really good example, because if you think that one day there is going to be a computer that's going to run everybody's money, then I don't think that's going to be the case. Certainly not for a long time yet, because how could we avoid those flash crashes? Now, what we would need is some kind of intelligence that goes in there to identify a crash or something that happens as something not to react to. And that needs a level of interpretation. Now, the guy at Facebook did a brilliant piece, and he was talking about the future of the internet. And one of the pieces he did was on artificial intelligence, because Facebook are pushing boundaries in that regard. It's among a few of the things they're planning on doing, but they're pushing boundaries. Now, with artificial intelligence, people think it's actually further advanced than it is. Trust me, if your name is Sarah Connor, you are not going to have Arnie coming to knock on your door anytime in the near future, because it is still a long way behind where we think it is, and where it needs to be to actually be of any real human use, as it were. Now, a great example he gave is that Facebook has 5 billion pictures uploaded to it every day. We're all taking pictures all the time, pictures of a dinner or pictures of people or holidays, and all of that is going into Facebook every day. Now, the computers crunch it, they analyse it, they scan it, and are able to start looking. You've seen it where they can say, this is a face, this is a person, and they can start to, at very, very early days, interpret what's going on in the picture. But when you strip away the pixels and just draw what it is those computers are actually identifying, it is very, very simplistic. And they basically just put boxes around things that go, I think that's a person, I think that's a tree. Now, even with their incredible computing power, the incredible amount of data they have coming in, you'd think they'd be able to interpret some of the most simple pictures that are going out there. They're a great example. Go and look at my Twitter feed. There was a picture, it's a very famous picture, I want to say it happened in Russia, where a plane came flying in over a motorway out of control, and it turned on its side and its wing clipped the motorway and careered off. And somebody with a dash cam caught a picture of it almost perfectly on its side, almost looking like it's balancing on its wing on a motorway with cars going towards it. And you'll probably all know that picture. Go to my Twitter feed, you'll see it on there. And the computers at Facebook had analysed all of these pictures, billions of pictures, and they could sit there and say some incredible things about that. This certain pictures would be like this, a picture of a man riding a horse and all these things. But when it came to that picture, they identified that picture as, rather than a catastrophic air crash hitting a motorway with cars on it, the computers actually said it was a plane parked on a runway. Now, that's quite comical, when the reason they did that is because they had no point of reference to anything before, because we don't have lots of pictures of plane crashes, certainly not in those instances. So the computer just went, well, what have I got that's near to it? Tarmac, plane, it's a plane on the tarmac. Now that shows you how far behind the curve artificial intelligence is. It's still a long way off from being anything that we think it could be, to be able to not only get data but interpret it and predict. So if you think about a computer possibly running money, possibly avoiding fat-fingered trades or market dips that sell off, and that at the moment these flash crashes that are that sort of exaggerated by computers, and will lose the people quite a lot of money who use them, that is a long way off yet. So the idea that a computer could actually do far, far better than tracking the market is still some way off, because if you think that a computer is going to be able to just yet not just take data, analyse it and use trends, but actually to start interpreting something and start predicting and making contrarian bets, and that is not going to happen anytime soon. There is something called big data out there, where if you get enough data of everything, then they crunch all the numbers, they should be able to try and predict a bit better. That's not the same as interpretation. That's just trying to find previous examples. Now, the reason I'm telling you all this is that it has a relevance to Donald Trump, because this week we saw, I'm going to go back to the investing bit in a moment, I'm going to talk about something called social investing as well. But Donald Trump, the polls and everybody said that Donald Trump was going to win, it wasn't going to win the election, and Clinton was. And also the key thing that happened, people said if Clinton wins, the markets are going to take off, and if Clinton loses and Trump wins, they're going to plummet. Now, those of you who are 80-20 investors out there would have had all my commentary and are not surprised that Trump won, because I've been pointing very loudly at the possibility and at the fact that markets would fall and then they would normalise. And my reasoning was based on experience of particularly Brexit. Now, I never thought for a second what happened this week would happen. Now, Trump won, okay, that wasn't outlandish in my view, but what did happen is the market, they fell. The futures market, which is what happened, it's the market where people trade, it indicates what will happen when the market's open, because don't forget, when Trump won the election, technically it was the early hours of the morning, and the markets over this side of the world weren't open. They plummeted 5%, but then they rebounded by the end of the day. Everybody thought the world was going to cave in, it was going to be Armageddon, and the markets would continue to fall through the floor. There were predictions of 10% falls, 20% falls if Trump won. The reality was, the markets looked like they were going to go down 5%, and when they did open, they were down, but by the end of the day, nearly all equity markets across that 24-hour period were up positively. And the US market was up over 1%, and since then has actually rallied. And the point is, there is nobody in the world who would have predicted that. And Donald Trump, for all his faults and the fact that we all wish he didn't win the US election, but that is democracy and that's what happens, Donald Trump has taught us a very valuable lesson. And it was a lesson that I was telling 80/20 investors a long time before, when we were actually in my commentaries around Brexit and before this election, is that when we were going into that election, and in any time in the future, you cannot predict the future. We can't, and that's okay. We can't predict what's going to happen with any certainty. But that's not the biggest problem. The biggest problem is that even if we could, we can't predict how markets will react. So if we had even predicted that Donald Trump would win, we couldn't predict how the markets would react afterwards, because in reality is nobody expected them to do what they've done. And actually a sort of an air of calm has descended upon things for now, I'm going to say, because I think what's happened is the market has never seen anything of the likes of Donald Trump before. Now, the sense of calm has descended, and maybe you couldn't have predicted that. So when you're going into an event, there's no point trying to predict what's going to happen, because even if you get it right, you can't predict what the market's going to do. And so trying to make trades over that period of time to try and exploit, I had people write to me saying, how can I exploit the US election? I just said, well, that's speculation. Let's not do that. You're better off investing for the long term and taking a long term strategy, because that's what 80/20 investor is all about. And I always hold that viewpoint, and I'm glad, I hope those people listened, because it's not because I'm saying that I know better than anybody else. I understand that lesson that we don't know everything. We can't predict the future, but more importantly, even if we could, we can't predict how other human beings are going to react to that environment, the fear, the greed, or whatever it is. You can't predict it. So this is the flaw we have with artificial intelligence and computers going forward. Human behaviour is very hard to predict, and we have artificial intelligence that's so far from where we need it to be. We are always likely to get fund managers who will outperform. We're going to get guys who do. We do. That's why 80/20 investor works, because we're able to identify those guys and ride those trends and pick the ones that do, because they are, okay, most people don't, but that's because of the fear of losing their jobs. So they will all tend to herd. But what you want are the ones who aren't in the herd, the ones who are contrarian, not necessarily contrarian, but put in they actually back their convictions, and they do outperform. So a computer is unlikely to be able to predict human emotions, because they in a way they need to. There's lots of ideas and things out there that try and do it, but it's a very tricky world. Now, I want to quickly mention something else called social trading, and this is something that's quite interesting that's coming more and more prevalent. Social trading is an idea. It's a disruptor. It's been technology is allowing it to occur, and it's where people trade and they can trade together. But rather than you being in an investment club or something like that, what you can do is you can just back somebody else. So you've got somebody who day trades for maybe fun, a living, or whatever, and you can go in and just copy what they're doing, or they tell you what they're doing. And there are sites out there that have been doing that. You would have heard of them. I'm not going to name them and give them free publicity. But there are sites out there where you can see people who trade on shares, and you can see how successful they are, and you can in a way rank them. And it's a bit like playing fantasy football. You can see the best people are, and you can choose to copy them or whatever and follow them. Now there's a firm out there that is doing something that's quite interesting, where they're going to allow, they have so many traders hundreds of thousands of traders across the world and users, and they are going to use a means of ranking those people and allowing someone just to buy the top, say, 50 to 100 traders, what they're doing at a click of a button. Now that's an interesting proposition, because it's saying that you are going to just back the people who are doing well. Now the one flaw that's I want to explore this more. I'm going to look into it. There is a flaw because it's still day trading. It's still, just because you're not betting money wildly, they are, and actually they're betting with your money more wildly. Not they don't get your money. The way it works is you just place a trade with your own money in a copied way, and that's great. But day trading is still volatile. Buying and selling individual stocks is incredibly volatile. There's a place for doing it. I'm not saying don't. There'll be things that people out there who might find that interesting, and if you do, you can tweet me or write to me, and I will give you a little bit more detail, because I'm going to have a look at it. I quite like the idea, but it's a slightly dangerous one in my view, because it opens up the idea of someone thinking that trading is simple, I just copy these guys, and if it was truly that simple. The problem is that traders inherently are gamblers, and if you put your money with somebody who gambles, inevitably they lose. Because the problem is people gamble, and this again goes back to Donald Trump. The market was betting on what they wanted to happen rather than what was likely to happen. And we do it with football. There's a football match going on right now as I'm recording this podcast. And England versus Scotland. It just shows you when I did this. And the odds will always be for England shorter when we go into a tournament. It's not a reflection how good we are, it's a reflection of our obsession that we want them to win the tournament. So, I hope that I've rounded that up. The future for investing is incredibly exciting. There are lots of disruptors out there. There are people like us doing what we're doing of 80/20 Investor. But one of the key points that came from the future of investing, certainly at this current stage, is nearly all of them perform better with a human overlay. And even the company that was doing that social trading said that when they had a human overlay, a human intervention that was looking at what was being picked, the 50 to 100 traders, and sort of screening them out slightly, their returns were improved. And it all comes back to the idea of whether it's something like passive investing. You may have something like that our sponsor talks about, they have a human overlay. But more importantly, what we do with 80/20 Investor, you can have the pure algorithmic stuff and follow that, and which is performed spectacularly. But it's also about allowing you to have that human overlay and the ability to take control when you want to and influence it. But you're getting something that will boost your returns and hopefully inspire you to invest your own money, but do it so successfully. Now, whatever industry it was that I saw, now it could have been cars, for example. There was a fantastic presentation about the future of cars. It was by BMW, and they showed you what would happen if you got a car. You press a button, a very minority report. You had a display that seemed to appear in front of the guy's head on the screen anyway, and you press a button and a car would turn up, and this was all video. It didn't actually happen there. And then it would take you to where you wanted to go, and as you're driving along, you could fall asleep, watch TV, or you could take control. And the key thing was that nearly in every different sector where there was a computer, an automation, or an artificial intelligence, there was an overlay where a human could intervene, and that would be able to in some way improve the experience. So you could be driving along, you get in traffic and you think, I'm going to autopilot, press a button, the computer drives. But then if you want to drive, then you have the ability to. And it just shows it's partly our human nature to want to be in control, but also it's the acceptance that computers are certainly not anywhere near the ability of not being infallible and be able to outperform humans. So the future for money and investing is looking incredibly bright. There's a lot of disruptors who are out there who are wrecking the financial industry in terms of the exploitation of investors, the overcharging, and they're making it more transparent, and they're actually making it more competitive, and we include ourselves in that. But something that is going to be a very simple way of beating the market or making you rich beyond your wildest dreams by having a Johnny 5 style artificial intelligence that can assimilate all the information that's ever been known to man and invest is a long, long way off, because computers can't tell the difference between a plain on a runway and a plane taking a bridge out. So that is it for this week. Andy will be back. I hope you enjoyed it. My whistle-stop tour of technology and the future of investing. If you want to know anything else about that conference and some of the things we saw, then do get in touch, because there were lots of exciting areas that we did look at. In terms of investing, then do have a look at 80/20 Investor. We have done some great commentaries, I have, that people have fed back on. That's not me being arrogant. People have told us that they love the commentaries about what's been going on with the markets, what we should do. And there are some, the real takeaway I want for people here, the great investment lesson that you can thank Donald Trump for, if nothing else, is the realisation that you can't predict what the future, and you can't predict what markets are going to do. And I want to just finish on one closing thought. Anybody who tells you at this point in time how to profit from a Donald Trump presidency is talking rubbish. They are after your money. They're trying to get PR or something similar, because the truth is they don't know, because Donald Trump is a complete lunatic who does not know his next thought, and he spurts them out. He doesn't know what he's going to do. He's already had an element of backtracking to a certain degree. You may listen to this podcast in years to come, and we may have had World War III, I don't know yet. But the point is that Donald Trump is very volatile. He doesn't know what he's going to be doing. No one does. And if he doesn't, how the hell can somebody tell you, here, this is how you're going to invest in this, invest in infrastructure, because Donald Trump is going to be building bridges and walls? We just don't know, so don't believe it. The idea is to stick to investing for the long term, because that is the other key point to all of this, is if computers can't beat flash crashes, how do you beat them? And the key is you need to extend your investment timeframes, because the Donald Trump thing, the US presidency, 80/20 investors wouldn't have been that phased by it. Of course, it's volatile. You're going to have periods where your money goes up and your money might drop slightly. The point is, the longer you invest for, these just become small bumps in a very long and hopefully profitable road. So extend your investment horizon. So quite a few tips in there for investing, some stuff for the future. And yeah, the future does look bright. Let's not all be depressed about what's happened over in America. Until next week, you can contact me as usual at damien@moneytothemasses.com. Please get in touch. I love it when you do, the feedback you get. And also, please, if you love this podcast, write in, because I've done this at the 11th hour and you just got off a plane, and I didn't want you guys to miss out. So until next week, goodbye.
Don't forget to claim your free copy of Damien's best-selling book, The 30-Day Money Plan. Sort your finances in just 5 minutes a day, worth $4.99. Just go to moneytothemasses.com/podcast to find out how.